Hey there! If you're a Canadian small business owner and you're ready to grow, you already know that financing is the fuel that gets you there. So, in this explainer, we're going to build a really clear playbook, using insights from the experts to help you get the funding you need. It's time to take your business to the next level. Let's jump right in.
All right, let's start with a scenario I bet many of you have been in. You need something new. Maybe it's a piece of equipment, a delivery truck, or a serious computer upgrade to help you land those bigger clients. And the first thought that probably pops into your head is, should I just, pay for it with the cash I've got in the bank?
And while that seems like the simplest, easiest route, it's actually one of the biggest and riskiest mistakes a growing business can make. Using your everyday operating cash for these big, long-term purchases can literally stop your growth right in its tracks.
And look, this isn't just some theory. As Concetta Farina from the Business Development Bank of Canada puts it, when you tie up all your cash in one big asset, you're starving your business of the money it needs for everything else, like making payroll, buying inventory, or, jumping on that amazing, unexpected opportunity that just landed on your doorstep. The big takeaway here? You've got to protect your cash flow.
So that brings us right to our first section. If you're not using cash, then what are your options? Let's break down the main tools you've got in your financing toolkit.
This table really lays out the trade-offs pretty clearly. You can see leasing is awesome for keeping your cash flow healthy, which is great for stuff like tech that you need to upgrade all the time. But you never actually own it. Buying with cash is the total opposite. It's all yours, but man, it can drain your bank account and leave you in a tough spot. A loan is that happy medium, letting you own the asset over time. But there's a specific type of loan for Canadian businesses that is an absolute game changer. So let's focus on that one.
Okay, let's talk about one of the most powerful tools out there, the Canada Small Business Financing Program, or CSBFP for short. This thing was designed from the ground up to help businesses just like yours get access to capital.
So what is it exactly? Well, the CSBFP isn't a loan that comes directly from the government. Instead, the government partners up with your regular bank or credit union and basically tells them, hey, we'll guarantee up to 85% of this loan. And that is the magic ingredient, because it dramatically lowers the risk for the lender, which makes them way more likely to say yes to your application.
So you might be wondering, is my business eligible? Well, the first big number you need to know is $10 million. To qualify, your business has to have a gross annual revenue of $10 million or less. This makes sure the program is aimed right where it can do the most good, at small and medium-sized Canadian businesses.
So how much money are we talking about? Through this program, one business can get up to $1.15 million in total financing. But it's not just one giant check. It's actually split into two very useful parts.
And here's how that breaks down. You can get up to $1 million in term loans for those big-ticket investments, plus a separate line of credit of up to $150,000. That line of credit is perfect for helping with those day-to-day operating costs. It's a structure that gives you both long-term firepower and short-term flexibility.
So what can you actually do with that $1 million term loan? Well, as you can see, the list is pretty broad. You can buy property, get new equipment, renovate the space you're leasing. It even covers things you can't touch, like franchise fees or software licenses you need to scale. That kind of flexibility makes it an incredibly powerful tool for just about any growth plan you can dream up.
Okay, so you know this amazing tool exists, but that's only half the battle. To really use it, you've got to get inside the heads of the people who are actually lending the money. Understanding how they see your business, that's the secret to getting your application approved. Lenders pretty much all use this framework called the 5 C's of credit to figure you out. Let's break them down real quick. First, capacity. This is just the math. The lender is asking, does your business generate enough cash to easily make the loan payments? Second, capital. This is all about having skin in the game. Have you invested your own money? It shows you're serious. Third, collateral. This is the lender's backup plan. What assets, like property or equipment, can you offer to secure the loan if things go south? Fourth, conditions. This is about the bigger picture. What do you need the loan for, and is your industry booming or struggling right now? And finally, character. This is your report card. Do you have a good reputation and a history of paying your bills on time? If you can nail these 5 points, you're in a fantastic position.
Okay, let's bring it all home. Let's pull everything we've talked about into a clear step-by-step game plan to get your application over the finish line.
When you look at it this way, the whole process is a really clear 8-step journey. I like to think of it in 3 phases. The first few steps are all about your homework, knowing exactly what you need, how much it costs, and checking your own credit. Then comes the prep phase,
shopping around for the right lender, and getting all your documents in a row. And finally, it's go time, submitting a perfect application and following through. The key here really is preparation. The more work you do on those first 4 steps, the smoother the last 4 are going to be.
And hey, let me give you a heads up on some of the most common mistakes that can trip people up. Don't be vague. Tell the lender the exact make and model of the equipment you need. Don't guess the amount, calculate the total cost, including taxes and delivery. Get all your paperwork scanned and ready to go before you apply. And please, please don't wait until you're in a panic. Lenders want to see a well-thought-out plan, not a last-minute emergency.
So there you have it. We've talked about the dangers of using your cash, we've unpacked the incredible CSBFP loan, and we've laid out the exact playbook for getting approved. The path to financing your growth is totally clear, as long as you're prepared. So the only real question left is the one on the screen. Now that you know how to do it, what's the first strategic investment you're going to make to grow your business?